Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressed when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Friday. Might be a relatively uneventful Friday. We don't have a whole lot of huge news. Next week is going to be a lot heavier on the economic data front. But let's go and see what we got. Okay, so yesterday they did go and tag that 110. I mean, it took them all day, basically, but they did eventually get up there and retraced the move from Wednesday from the PMI numbers. And now overnight, a little bit further up, we're getting a little bit of risk aversion in the market, coming out largely from currency changes, I believe. Here you got the S&P 500. I mean, they're down a little bit, but mostly where they were. So the equity market isn't like really freaking out huge. Here you got oil going up. I think it was Chevron having a strike with the natural gas workers in Australia. That's been like a long time coming, and it actually happened. Silver and gold kind of recovering along with the treasuries, but not too much, fortunately. In fact, silver actually looks like it's still struggling here. We got copper. Copper continues to kind of be, it's actually on a pretty nasty losing streak right now. And we'll come over. There was a bit of noise around Bitcoin, some headlines about FTX, so forth, like actually a couple of really bad headlines and apparent like pumping of the Bitcoin and stuff, and curiously enough, they're doing it while the futures are closed. Very, very suspicious behavior. And then we come over to the dollar. The dollar's still looking pretty strong. I'm sure that China is probably still selling dollars out there, so otherwise I think we might be a little bit higher. But you can see, like, if we come to the Japanese yen, a big spike on the Japanese yen at one point, so that's basically where we're at. I'm seeing some pretty good movement in the S&P 500 right now, though. I mean, we've moved 15 points in the last 30 minutes or so. No, I don't think that it's up because of the first. There hasn't been any headlines of any sort. The headlines that have been released, I think, are kind of like a bit of a distraction that, so people think that the SEC is going to be forced to approve the Bitcoin ETF, right? Meanwhile, the SEC is investigating Grayscale now. Okay, like you're gonna go and approve their ETF while you're investigating them? Come on, it's not gonna happen. So it would be so irresponsible. I mean, people would be suing the SEC if they allowed the ETF to go forward and then Grayscale, was found to be doing something fraudulent or whatever and got taken out, right? So I don't think it's that. And one of the things that happens in Bitcoin a lot that you really got to watch out for is they will pump it during bad headlines. It's like these guys know that such headlines will be bad for the price of Bitcoin, and so they go out and they buy a little bit of it during that time to force the price action to go the other way, right? Because if it actually did go down on bad news, then everybody be like, oh no, and start taking their money out, and it could just fall around. I'm telling you, man, it's like clockwork. that anytime a really big bet, like when FTX, got taken out and all of that noise happened, right? There was huge pumps before that. Every time. No, it's not already approved by the SEC. The SEC denied the ETF, and then it went into a court case, and the judge ruled that they have to reconsider it. But I'm pretty sure that the SEC will just find another reason to deny it. That's why last week he kind of saw a little bit of a jump in Bitcoin, and it's completely come back because everybody realized that that headline didn't mean what they thought it did. Well, it looks like there was a little bit of buying on the open here in the treasuries. And the amount of buying that I'm seeing there is significant enough that I think that we've got to be on our toes here. I wouldn't necessarily be expecting a whole lot on a Friday with not a ton of news. We do have a Canadian number. Oh, we already got the Canadian numbers, actually. I'm like super late today again, huh? Canadian employment change, 39.9 versus 20. Well, I don't think that can explain the treasury movement. So, So, let's go poking around, seeing if there's any interesting stories out here. GameStop chair Ryan Cohen probed by the SEC for Bed Bath & Beyond pump and dump. Oh. That actually is an interesting one. We'll read that. Yeah, hold on. I guess we'll go and read it right now. Okay. Ryan Cohen made his money by selling Chewy to PetSmart for over $3 billion. His claim to fame, however, is being one of the key architects of the meme stock craze, which emerged in early 2021, which culminated with Cohen becoming chairman of GameStop later that year with multiple pump and dump schemes orchestrated by Cohen, who has a deep fan base of individual investors who herd into the stocks he buys before and after, including Nordstrom and Alibaba, but none more grotesque and in your face than his 2022 involvement in Bed Bath & Beyond, which we watched quietly for weeks before lashing out against what was one of the most blatant stock manipulations in recent history, is what they say. So Ryan Cohen himself was instrumental in triggering the Bed Bath & Beyond gamma squeeze by buying massively out of the money calls. After stratospheric gamma squeeze, Ryan Cohen files to sell stake in Bed Bath & Beyond. As if millions of apes suddenly cried out in terror, Ryan Cohen dumps his entire Bed Bath & Beyond stake. Okay, yes, I do remember that, but is that really manipulation? Like, if you buy options and your options move that stock, that's not illegal. Is it? Well, let's see why the SEC is looking at it. Well, now it appears that Gensler has finally figured it out, because according to the Wall Street Journal, the SEC is investigating billionaire Ryan Cohen's ownership and surprise dump of Bed Bath & Beyond shares at a time when such so-called meme stocks were all the rage with investors. As we reported at the time, In early 2022, Cohen took a 9%, $120 million stake in Bed Bath & Beyond and pushed for changes to the housewares retailer sales strategy, but abruptly sold his 11.8% interest in August of 2022, just days after tweeting positively about the company. The 5-month investment netted him a profit of nearly $60 million, as many investors followed Cohen blindly into the trade, believing he would follow the same playbook as he did with GameStop. Okay, so if you're buying it and tweeting positively about it, and at the same time orchestrating an exit, that could potentially be stock manipulation. Cohen's apparent, if fake, interest in the company spurred a frenzy of trading that caused it to soar 34% in a day before collapsing when he disclosed the sales, prior to which he had gotten 3 new members appointed to the board. According to the Wall Street Journal, the SEC has requested information from Cohen about his trades and his communications with officers or directors at Bed Bath & Beyond. The regulator has also sought records from some of the company's current and former board members. A group of Bed Bath & Beyond investors sued Cohen last year in Washington, D.C. federal court, alleging he committed fraud because he was aware of bad news about the company that hadn't been disclosed when he sold his shares. Wait, let me read that again. A group of Bed Bath & Beyond investors sued Cohen, alleging he committed fraud because he was aware of bad news about the company that hadn't been disclosed when he sold his shares. They claim his statements on Twitter and in SEC filings were part of a pump and dump strategy that left small investors nursing big losses. In an order issued late July declining to dismiss the investors' claims, the U.S. District Judge Trevor N. McFadden called the timing of Cohen's trades sketchy. According to the investors' lawsuit, Cohen misled investors when he tweeted on August 12th of 2022 in response to a negative news article about Bed Bath & Beyond that included an emoji showing the face of the moon. Cohen's defense argued that emojis can never be actionable because they have no defined meaning. The judge disagreed and wrote a rather strong-worded opinion on the matter. On emojis? Emojis may be actionable if they communicate an idea that would otherwise be actionable. A fraudster may not escape liability simply because he used an emoji. Just like with words, liability will turn on the emoji's particular meaning in context. To be sure, many investors took it as a bullish signal indicating that Bed Bath & Beyond stock would go to the moon, according to the lawsuit, and the stock rose 12% that day. The judge in the lawsuit also found Cohen's 13D filing material and misleading, failing to disclose any solid plans to sell the stock. Cohen sold stock on the same day he filed the 13D, which makes it plausible that the sales were planned before filing the 13D. Oh, yeah, that might be illegal. And lastly, the judge found the Form 144 plausibly, materially, and misleading for only mentioning the potential sell, even though Cohen had already sold stock at the time. The judge found it plausible that Cohen had knowledge on material adverse information about the company at the time. In his response to the investors' lawsuit, Cohen denied misleading the market about his trading plans. He decided to sell, he said in a court filing, because the stock price had unexpectedly increased to a value that exceeded what he believed it was worth. Cohen also said that one of his earlier disclosures told investors that he could sell some or all of his shares. He didn't change that statement, so investors were on notice that Cohen could dump his stake at any time, his court filing said. In declining to dismiss the case, Judge McFadden wrote that investors plausibly alleged that Moon tweet, replayed by Cohen, was telling his hundreds of thousands of followers that Bed Bath's stock was going up and that they should buy or hold. In the week after his tweet, Cohen filed 2 public updates to his Bed Bath & Beyond holdings. The first, on August 16, 2022, said he hadn't done any trading during the prior 60 days. The second, filed on August 18th, said he began selling all of his shares 2 days earlier. Oh my God. So he literally says, hey, I haven't done anything, so that people would read that and do stuff based off of it, and then sells 2 days later. What a load of crap. As for the fundamental investment case that Cohen may have had when he brought $120 million in Bed Bath & Beyond stock, There was none. The company filed for bankruptcy in April and has closed hundreds of its stores since last year. Can someone explain to me, though, what's wrong with the Bed Bath & Beyond retail strategy, though? Because I always enjoyed going into that store. It was just full of, I guess I never bought anything, but I thought that there was tons of interesting junk in there. Well, I don't know what was with the buying that we had ahead of all of this, but it's coming back down really easily. The Japanese yen is falling here. What are you saying, Walter? I don't see your first. I just see can't, and I don't see any other messages. Kroger and Albertsons agreed to sell 413 stores to C&S Wholesale Grocers, hoping their move will help win antitrust approval for their $24.6 billion merger. I don't see why there'd be any problems with Kroger and Albertsons merging, considering that Albertsons already basically sells Kroger stuff. Who trades UB? Well, we the bonds all move together. But I put my trades in ZN or in the micros. Oh, you confused. Yes, this is a different coin, yeah. This, I really hate these like pump and dump schemes. Like these guys that basically the way that they make their money. Well, I mean, it totally makes sense, right? Obviously, the whole game here, if you make money, it's because you correctly predicted future orders, in essence. Well, if you can actually create those future orders without spending any of your own money, that's the ultimate edge, I feel. The ultimate edge is to be able to create orders without having to spend any of your own money. And so now, in the post-COVID market, there's just like tons of people have figured this out and are doing everything they can to try and pump and dump things. And you got Cohen here, and this is what Vivek did too. That's what Vivek was doing, was he was a pump and dump. He bought a medicine. He knew that the medicine wasn't very effective. He manipulated the previous trials of it so that people would think that it stood a chance of getting approved. And then, basically pumped the stock up and sold his way out before the results of the trial that the new company were doing came out. It was a pump and dump. Without question. Jose is like, well, you took a risk and then it didn't work out. No, you knew the whole time. The thing is you knew the whole time that it was BS. Materially misled investors on several things, including that it was a company with only like 8 employees. Can you imagine that? Like, can you imagine if I just go out and randomly start a company and IPO it? I've only got 8 employees in this company, and this company is worth billions of dollars in the stock market. It's just nutso stuff. And the way that he tries to dismiss it and everything is super shady too. Don't like that guy. Republicans, not your friend. Throw him to the curb. Oh, politics. I don't know if I want to get started on the politics again. So many things going on, and I'm very apprehensive about where things are going and what might happen. Dollar's relentless rally set for a boost from higher oil prices. Oh, so you know what this reminds me of? I was watching this video yesterday. It was from Wall Street Oasis. If you're not familiar with Wall Street Oasis, it's a website that is basically a forum geared towards financial professionals or people that want to become financial professionals. So it doesn't have as much content relevant to us, but you know, it has a lot of good stuff about Wall Street. And so they had this video, and they must have taken it from somewhere else. It's some documentary, and they were talking about George Soros and Peter Dunkelheimer or whatever his name is, and how a lot of, you know, how he was able to build his portfolio up during the 1987 crash. But they were saying that in George Soros's book, The Alchemy of Finance, he argued a special rule about currencies that, like, normally when you're running a large deficit, that it's bad for your currency, and that is true. But when you're running a large deficit and you have expansionary fiscal policy, but you have tight monetary policy, that tends to make your currency go up. And so it's a special case where the increasing deficit does not result in your currency going down. And I was like, oh my gosh, that is exactly what is going on right now. Is we have a huge deficit. The monetary policy has been, the fiscal policy has been easy, and the monetary policy has been tight, and the result has been a stronger dollar. Really need to read his books. Someone on Reddit asked why there is always volatility at 8:30 New York time. Dude, I don't know what we do about this problem. So you know, I was talking with I think it was Tariq on Discord earlier, you know, and there was a couple of things that he was like, oh, that wasn't clear from your videos, and that wasn't clear from your videos, and I was like, maybe it's not. Like, I went and I made all of these videos, and I thought that it was like, this is like everything that you need to know. And I do, you know, part of the problem is you probably have to watch like all of the videos, because a lot of the earlier videos were just like, how do you even get started finding a broker, all of these sorts of things, right? And then the later ones are the more advanced order flow stuff. But clearly I do not think I did as good of a job as I thought, because I continually see beginners. Like, I tell you what, like, just getting started in the trading world in general is hard, but like doing it in futures is really, really hard, because like the platforms and so forth are just not set up with everything that I feel that you need. If you go and you get NinjaTrader, you get NinjaTrader and Jigsaw, and you trade with NinjaTrader brokerage, then that's great, right? But that's like a $1,500 investment just on the software. And most people that are going into futures, the reason they're doing it in the first place is because, you know, of the ability to take on less risk. You know, so having to spend a whole lot up front on their software is not really in line with their goals, you know? And so it's incredibly frustrating. And then it's like getting your data sorted out and it's a pain in the butt. And it is a lot harder, I think, to get started in futures trading than those of us that have been doing it for a while realize. And then there's everything else that you got to learn to get into trading. And then the problem is that there's just the resources that you need are just not easy to find. My channel is just, you know, it's not the first one that the algorithms send to you. We're in a niche where the way that the algorithms work and everything works against us, essentially. And it's frustrating because there's lots of people that they're really interested. I mean, look, I don't think that everybody that comes, the majority of people that come in and try futures trading are going to lose. That's just the way that the game works. The way that the game works is the majority of people are going to lose. And if everybody that was a retail trader that came into futures trading was forced to watch all of my videos and learn everything that they could from me first before they could get in trading, all that would do is just make trading harder for everybody, right? Because it would just mean it would require even more knowledge beyond what even we have to really be competitive in futures trading. This is like the majority of people have to lose one way or another, right? Okay, but there are people out there that are serious about it and enjoy it and enjoy just learning about the markets and aren't just trying to look for an easy, quick way to make money and stuff like that. And the way that things are set up, I think, discourages them and pushes them out of the market faster than is necessary. And I thought that we had made really good strides towards alleviating some of that friction into getting in the market, but I'm realizing that it's kind of hasn't, because there's still issues with getting your data sorted, and the whole that's one of the other big problems, is that NinjaTrader is one of the best platforms, but their brokerage is not. And basically, you basically to the point where if you're going to use NinjaTrader, you want to use their brokerage. Scott Adams, I wonder how long the DNC can screw Robert Kennedy Jr. before he decides to destroy them. A third-party run would do it. Their greatest fear must be a Democrat who is unafraid and unbribable. Did you, about your levels, if we're not meant to use them, why are they out? Did you watch the video? Go watch the video again. So the whole point of the video was, okay, people like volume profile and these levels from volume profile. Let's backtest it and see how well it works. And the result was, it doesn't work. So trying to base our trades off of previous day's point of control, value area high, value area low, is not very effective from the evidence that we have. Okay. But then what I did is I went back and I said, okay, here's some things that we do know. And how can we make that fit into what we do know? And then I provided you a framework that was more effective. Right? And then I also said, like, hey, I'm going to put the stuff that I made to test this out there so that you, one, can test it yourself, and two, if you really want to, you can try your hand at modifying the strategy until you can get it to work. Personally think that it's a waste of time, but it's there if you want to do it, right? So if you want to create your own, if you want to write your own strategy from it, then go for it. But like downloading it and using it to trade off of, like in a discretionary manner or something like that, don't waste your time. Because the whole point of the video was, that doesn't work. Here's what works instead. Or here's what is true about the market, at least, instead. I don't think I can ever come back and say, you know, this works, because the market is constantly changing, right? This is this other thing, and I apologize in advance to any of you guys if you're like Gen Z, okay? But one of the things that I'm starting to notice with the Gen Z kids is that they are not very good at figuring things out on their own. Basically, it's like anything that there is that's worth knowing is on Google. And if there's a problem, I should be able to just search Google and have the answer there right in front of me. And if the answer isn't right in front of me, then like there's no solution, essentially. And that's the way that Gen Z has like learned to navigate the rule. And so my kids do this all the time. It's like, if the first thing that they tried doesn't work, then they just like shut down and give up. And in trading, you can't do that, because trading is this gigantic, think of it as this gigantic, vast reach of space with billions of tiny little dust particles in there. And some of these dust particles, all of these dust particles are like strategies or pieces of information to help you in your trading. And some of these particles are actually good, that will actually help you in your trading, right? But how do you know which ones are which, right? And one of the ways that you can do that is you can just collect as many dust particles as possible and then inspect them all and try and find the gold in there. You know, like, you're going to have to go in and find things that other people haven't found. That means that you're going to have to do it yourself, and that you can't just search Google for it. You know? So that's why I try and give you like the tools and the raw information, rather than trying to say, like, here's a strategy and trade it. Because I know that if I give you a strategy and you just like start trading it, that eventually it's going to stop working, because that's just the nature of the market. The issue is, so the big question I have for you on the volume profile, though, is what makes you think that those levels in the volume profile have any real use at all? Why is NinjaTrader brokerage so bad? So the reason I don't like NinjaTrader brokerage is, one, I don't really like their data package, and two, I don't find their support to be very effective. And so same with AMP, to be honest with you. So it was this one thing. By the way, did you sorry, I forget what their name was, but they were messaging me. Somebody was messaging me on Discord yesterday because they could trade the 10-year micro treasury yield futures, but it wouldn't give them data for ZN. I'm like, how do you get the info for the yield futures but not the main treasury futures? That makes no sense. Like, you have CBOT data, you should be getting ZN. And then they go to AMP support and they're like, well, so why am I not getting ZN? And they were just getting this canners because the support guy doesn't know. So that's what I don't like about the discount brokers. Like, the thing you gotta realize, think of it this way, okay? Your introducing broker doesn't actually do a whole lot, okay? Like, when you submit trades, okay, it goes to your futures clearing merchant, okay? Like, your futures clearing merchant and your data provider have an agreement together, and that's the place where, like, the real stuff happens. And the difference between your introducing brokers is just they're the ones that work with you. That's really all it is the FCM is doing so much, like managing the positions and everything. They don't necessarily have the time to go and talk to every customer and sort things and help you out when your platform's not set up and all of these things, right? So that's really what you're paying your introducing broker for, like AMP. And of course, AMP and NinjaTrader do have their own clearing firm, okay? But when you go and you have a problem and then the support isn't very helpful, then it's like, what am I paying you for? Why am I paying any kind of commission at all if that's to pay for the support that you give me, and the support that you give me is crap? Right? When I talk to the people at EdgeClear, they know what I'm talking about. I mean, they make mistakes, for sure. And I, like when I started out with them, I had to talk to them about my data and to get my data set up correctly and everything, because they didn't set me up to be able to see everything. Okay. But when I messaged them about it, they knew exactly what I was talking about, which is not the case at AMP and NinjaTrader. So that's why I don't like them. Now the good news with NinjaTrader is that hopefully you never actually need their support, because their platform is pretty solid enough that you don't have to mess with that stuff. But so what makes you think that those supply and demand lines that you've drawn have any kind of use whatsoever? Like think about it. Think back to my analogy of we're in a big open space, and there's all of these little dust particles in there, and some of them are gold. And how do we find which ones are gold? Okay. So you go and you're telling me here's this one little speck over here called support and resistance. And it's all the way on the other side of the room. Why should I go over there and look for gold in that area of the room when I'm already in an area of the room where I know that there's a lot of gold? Right? Like what makes you think that there's gold over there at all? Because a lot of people on the internet talk about it? Because that's a contrary indicator. You see a lot of people on the internet talking about it, probably means that it's already been mined out, that they've already taken all of the gold out of that area. One of the best things that we've got going for us. I'm still new. Go easy on me. Okay. Well, I'm glad that that's your response, because that means that maybe you're learning. Okay. But one of the biggest advantages that we have here is that what we're doing is complicated, and like most people don't have the dedication and the interest to actually come in and learn this stuff so that they could compete with us. You know what I mean? Like if I was a top YouTuber, if I had 1 million subscribers, I would have to approach my trading differently. I would have to start playing a different game. The good news is that if I had that many people, then I could probably start playing the hedge fund game instead. But complicated is better than well, there you go. Well, but you don't need to. Well, my messages on Discord are always open. Okay, so you can always message me, and I often don't see it until days later because of the way that Discord works now. But I try and respond to every message that I get. But you just watch the videos on the channel. Like I have a getting started video, and I have an order flow playlist. Those two playlists, getting started playlist and the order flow playlist. Like if you watch all of those videos, and then if you have questions, come and ask me, right? But the question, well, you didn't answer the question though, still, right? Which is what makes you think that there's any use to those things whatsoever? Well, my argument is that there should be empirical evidence, right? If something is effective, like if there's something true about the market, that market tends to reverse at support and resistant lines where it had reversed previously, then I should be able to produce empirical evidence using data from the market that supports that theory. I've never seen any such empirical evidence whatsoever. It's just people believe it. Lots of people claim that they've made money doing it. But where's the empirical evidence on it? CB's lagging, yeah. We're flattening again, aren't we? That's curious to me that you want to be free from slavery, don't use most media or social media networks. But you use, so the one that you decide to use is WhatsApp. But I don't use WhatsApp, so I don't really understand what the big deal is with WhatsApp. Other than that it's another messaging application. Oh, because it's your family. Okay, I gotcha. Yeah. It seemed Leb was on Tim Ferriss's podcast. I don't know who that is, actually. Do you think that this downside is going to continue? I don't know. It's been a little bit... They've gone back and forth in this area a little bit. So I don't know if I have enough evidence yet to say that we're in a downtrend. Yeah, in other words, proven behaviors supported by empirical literature demonstrating their extensive use over extended periods. Yes, or even better, your own research that you could probably write empirical literature about, but you know you're not a graduate student or whatever. Yeah, because if it's rare information, that's even better, right? And that's kind of the thing is what I can do is I can look at the empirical literature, which is a great term. And that kind of can give me a good idea of where to start, right? That because then at least I know that the foundation, like that the place that I'm starting from is a place that's based on actual, like, real correct information. Because anybody can come in and look at the market and then come up with a theory for what's actually going on under the covers, right? How do you prove that all of those ideas and theories and so forth are true? Well, you create a model, and then you compare your model to the actual market data. That's how this works. And, you know, these technical analysis people, they never do that. Where's the evidence that past support and resistance lines are reliable? I don't see it. I'm way more interested in there's a support and resistance line there. I know a bunch of retail traders are probably going to try reversing it there, but I know that they're likely to go through it this time because we're getting strong flows, and this is the reason that they're selling it, right? Just plow right through them. Those are some of the best trades. Having a hard time reading this type of market? Yeah. Well, so the wealth talk is definitely a difficult market to read. But the trick is to realize that most of what we're seeing right now is probably just noise. And there's not a very good reason. I mean, we want to stay vigilant. We want to keep watching it. But at the moment, I don't see very good reason to get involved in this market. The art of interruption. Wait, so let me open this up again. Who was the other guy? Scott Patterson. I don't know who that is. I went long on ZB before we touched yesterday's high. Got a few ticks, but wanted to see a potential breakout. But yeah. If I really did want to, like, if I was insistent on I need to take a trade in this market, I would probably be going for the mean reversion trades. I suppose that we do need to start looking at those a little bit, because there is a chance that we go back into a low volatility regime. I don't know. Every time that I say that, it doesn't happen. The volatility has been really good on treasuries for a long time, but when I started trading, we were in a low volatility regime, and it was, oh my gosh, man, it was so hard. So hard to trade in those days. So how can we make it on yes and not trade blindly? Well, so the key thing, again, is orders move markets. So we need to be able to predict future orders. So the question is, what are some things that predict future orders? Well, there's lots of different things that could potentially predict future orders that there's probably more research that needs to be done on. We definitely know that news produces orders, right? People trading based on changes in expectations about future fundamentals and future flows. That will create orders. Another thing that I know creates orders is like fund rebalancing. So different funds, like index funds, sometimes they need to buy or sell at the end of the month, because based on, they need to have all of their stocks equally weighted, or weighted to the index, or whatever it is. So that's another one. Another one is market makers that are making in options. They end up with positions, and they have to hedge their positions because of gamma. So what that means with gamma is that, as the stock moves, like the gamma increases, which means that the price of the option starts to change more as they get further away from that price. And so they have to hedge against that by buying or selling the stock. So you can sometimes look at people's positions in the options and sort out certain prices where they're going to have to start hedging. And that can either put a clamp on volatility, or in some situations it can lead to an explosion in volatility. That's another thing that we might know that might predict future orders, right? Now, here's another thing, is that the market is not informationally efficient. That means that, like, the current price is not actually reflective of all available information. So there might be something that you know about the market. For instance, something that I think we know about the market that isn't very well reflected in the market right now, I think, is that the jobs numbers that we're getting aren't really actually very good. That the labor market is actually much weaker than it appears than the market believes. So that's a piece of information that we could potentially capitalize on. If we run into a situation where all of a sudden that fact becomes relevant, then we have an opportunity to get in on the trade before everybody else does. So the question I'm always asking myself is, what is it that I know, that I can see, that not everybody else in the market knows, that might possibly predict future orders? I think one thing that we could be doing on a day like this, I just don't know what they actually do, but there's a lot of, like, they move money around before the weekend. Like, there's a lot of movement in currencies on Fridays, apparently. Right? Now, if I don't have a piece of information that is relevant to that specific moment that suggests that I can predict the future orders, then I just don't trade. And you can tell I've already basically kind of been into, I'm probably not going to take a trade, and I'm going to focus my attention on the people asking questions in stream, because now is a good opportunity for me to do it and not really miss anything, because it's a no news Friday, right? How many positions do you open and close weekly? You know what? As time goes on, it's less and less. As of late, it's been maybe like 3. On average, I'd say it's about 3. But then when there's like big weeks, then I take tons of trades. Right? I'm probably going to take a ton of trades next week, because we got CPI and a bunch of other stuff. There's probably going to be a lot of movement next week. Fat fingers create orders. There you go. I saw something last night that said this bump in oil will be deflationary this time. Really? Well, so I'm guessing that their argument is that higher oil would be so destructive to the economy that you would just see a lot of assets sell. Possibly. Do you have private signal info maybe? No. So when I think I have a piece of information, so here's what I will do. Is I will come in and I'll be like, well, here's the things that I'm looking at that could potentially drive flows today, right? And when I say that, that usually means that I have some idea for a trade. And I'm just waiting to see evidence of that flow in the actual order flow before I take it. So I will kind of drop hints. I will drop all of the information that you need to come to the conclusion on your own, but I won't explicitly say I'm thinking of going long, I'm thinking of going short. And I won't say anything when I do it, because ultimately I don't want people trying to front run me. That would be bad. I mean, that would hurt my trading, but I also think that it would be kind of immoral to start manipulating markets by, you know, my audience. Because there are some people out there that do that. They're like, okay, I'm going to get in a trade and tell everybody about it. And then, you know, they just ride the wave of everybody following them in the trade. And then once all of their fans are in, they get out. You know, they pump and dump, essentially. Okay, I have a question. You can see on ZN 796 orders. Why didn't price continue on pushing? Who knows? It's odd that all of the sudden the buy demand just like completely sputtered out, right? It could be that somebody needed to buy, and that's just how far they pushed it. And then once they got to 05 half, they, you know, were done. They had bought all of the contracts that they needed. It can be kind of hard to know when it's going to do something like that, you know, because a lot of that is random. But it is something. It's good that you noticed that, right? Because we're looking at those 6 forces. It's an important thing to note that all of a sudden the buy side demand just kind of like sputtered out at 05 half. Now, when I'm looking at it right now, and in fact, let's clear what we've got above us here. So they're trading a decent amount into 04 now. So it's interesting. So, you know, this one is two-sided, but it's interesting that there's a large iceberg there, but it's also interesting that there's enough market orders to push it there. I would say, yeah, now we're seeing 04 half. That looks really good for a possible attack at the high. It's also a relatively significant change in cumulative delta. Now, the only pause. So if I had come in to today and said, I think that they're going to buy it today, then I should already be in the trade. I should already be in there. In fact, I would maybe have tried hitting 04 into the iceberg and be up a tick, right? But since I have no such flow today, I'm not in a trade. Now I could say, now that I'm seeing a flow, maybe that alone is enough to get me into one. But because it's Friday, I get really, really suspicious about flows, like really strong flows that kind of pop out of nowhere, because on Fridays they kind of have a tendency to like sputter out really quickly and reverse on you. Can you make a video titled "If You Could Start Again"? I don't think that I would change anything. But I have videos on that. I have videos on like the biggest mistakes that beginners make and so forth. Is it worthwhile to endeavor into deciphering the intentions behind substantial market orders? Yes. 100%. That's exactly what I'm saying. If we are buying, okay, so we are buying, and it does look like, well, okay, now that we've did that, in fact, I don't really want to trade my live account here, but I'm just gonna do it on sim here. Okay, they traded a lot at 05.5, so probably we're going to continue pushing up here a little bit. The question I'm asking myself right now is, what's causing this flow? Well, there is a bit of a rise in the Japanese yen. And the dollar is shifting, so it may be a change in currencies. Is that just like your usual Friday currency type movement? Or is there something bigger going on here? But I'm really skeptical about there's something bigger going on here when it's a Friday. Because you don't, why would you do that on Friday? Yeah, it is the open of the S&P. That's a good point. The open of the S&P usually drives a few orders, and they're looking kind of risk adverse today, so they could be buying treasuries and selling equities on a risk off trade. But yes, anytime that I see any kind of a trend, I'm always asking, okay, that's a large meta order. What was the cause of that large meta order? Why were they trading it? What caused those orders? Every time. And most of the time, by the end of the day, we can actually get a pretty solid idea of why. Most of the time. So how did you learn trading? By sitting here and watching the market every day. I think one of the things that prevents a lot of people from really getting very far and figuring things out is their complete reliance on technical analysis. So we saw it down tick there, and the 06.5 was a little bit weak there, so this one was only just for like the break of the highs, like the stop run. So I'm gonna put my limit order out there and see if they fill it. Anyways, I think that people rely solely on technical analysis, and that prevents you from learning, right? When you take my framework, which is, okay, when you see a trend, there's probably a reason that order was coming out, right? Well, now you have a challenge, right? Go and research today, and I would go and read Zero Hedge, and I would go and read all of the financial news sites and everything else, and look for possible reasons why we were seeing the buying flows in the treasuries today, right? You have that research, and then you can learn what moved it that one time. And it can potentially be something different every day, right? So there's always something to learn about the market from it. Wow, so not only did they fill me after I felt stingy for a bit, not only did they fill me, but they made 2 more ticks. Okay, but they did come back there. So I think that at least for that trade, for the reasons what I was trying to play with that one, it was okay. And hey, it was a treasury trade that didn't go any ticks against me. I still find another thing that we can do is, let's say that we can put ourselves in the mind of the person that's going to execute this, right? So I need to go and buy a ton of treasuries today. Okay. How do I go about do it? Well, one of the questions that you're going to ask yourself in that situation is, when do I actually start submitting my orders? Right? Am I going to do it like right at the very beginning of the session? Well, it actually makes sense to do a lot of that at the beginning of the session because there's going to be a lot of volume at that time. This one didn't really start until just before the S&P 500 open. That's a little unusual. The timing of that is a little odd for such a strong flow to come through. And how much was it? Net. Oh, that's actually only net 5,000 contracts? Really? So it's definitely a currency movement. It's got to be the dollar going here. Oh, and you know what? It's across the board too, because I see it in the Japanese yen and I see it in the euro. Okay. What do you see when you want to go long or short? Trend lines and technical, yeah. So, first of all, I'm going to have things that I believe predict order flow for that day, right? And based on that, if I see an imbalance in those flows, like one of those flows is going to be really big and it's going to cause a lot of buying relative to everything else, and so we're probably going to move up, okay, then I want to go long. Then the next thing that I'm going to be doing is I'm going to be watching in the order flow for signs that there really is a large meta order like that. So if I want to go long and, they're hitting pretty aggressively this iceberg at 04, right? Because normally, if I'm a retail trader or if I'm just scalping and I see an iceberg, that's not necessarily a good thing for me. That's not necessarily good for a momentum trade, because what it means is there's more liquidity at that spot than usual, and that means that on average it's going to be harder to get through that price than other prices. So why would I buy into that? Okay, but if there's an iceberg and they're buying through it so aggressively, right? Well, if I was somebody executing a large meta order long, I'd love to see an iceberg there. That means more contracts at a better price for me, because I would otherwise have to trade like 3 or 4 ticks up in order to get that much volume, right? So them hitting into that iceberg aggressively becomes a very bullish signal. And I kind of think that what might have happened there was a bunch of market makers, got caught the wrong way and are maybe puking a little bit on that. Now what are we getting up here? Look at 07. Watch it. Okay, so there's only 350 contracts and nobody's hitting it. And it's not stacking, it's just staying really low. And they've ticked up and down on that price a couple of times. Let's just see if they tick up again, how many bid? Okay, so it ticked up and only about 300 or 400 bid, and then it ticks back down. Right? Now, that time when it ticked back down 1,200 contracts. But I bet if they start trading it up, that most of those contracts cancel, and it's still only 300 contracts to make it go bid again. So we've just gotten like 2-3 tea leaves there. Okay, they traded down at 06 half on not a whole lot of contracts either. Okay, so... Okay, only 161 to take it bid that time. So what is that? It's a liquidity hole. You're getting the liquidity hole, and what do you know? 070 is already like the high point in the volume profile in this area. So already a lot has traded there at 07. But you're getting some signals that there's a large meta order here, or rather that the large meta order has created a liquidity hole at 07. So under normal circumstances, I'm going to take my profit there. And in fact, I did. That's exactly where I took it off at. Is it coming together yet? You're actually him. I'm actually who? I'm just Seth. Oh man, so Andrew Tate is one of those things where I probably should be careful like what I say about it, right? But he, in his Hustlers University, has a trading section, and I haven't taken the course at all, of course, but everything that I've seen online from it, because there's lots of his fans that were like posting the stuff on TikTok and everything and saying, okay, I'm trying it and I'm journaling what I'm doing here. And everything that I saw about it was screamed like, stay away. There were basically, it looked like a pump and dump to me. It was like Andrew would come in and say, here's a stock that I think is really great. And then sometimes it worked and sometimes it didn't. But there was no didn't have any evidence that they had any kind of edge whatsoever. But a lot of that comes back to kind of my approach here, because part of the approach is, how do you decide where to spend your time, what to investigate, where to put your capital, where to put your interest capital, right? And I say empirical evidence. So if I go and I look at some so-called guru and they're not sharing information that is based on empirical evidence, and of course, I don't have the time to sit and show you all of the empirical evidence here, but, I cite studies and stuff, especially you go and watch those videos, and the videos, I show you the books and I show you the studies. Okay. But if I'm watching a creator and there's just absolutely no empirical evidence whatsoever, then I'm not no interest whatsoever. I'm sure there's plenty of great guys out there that would be interesting to watch, but unless, and when somebody gives a recommendation, like my first question is like, okay, did they have empirical evidence? Right? If they don't have that, then why am I going to go spend time watching their videos? Yeah, it's not Andrew, it's like his other professors, but I was seeing them post. I was seeing him post I was seeing his followers post trades that Andrew was posting, so I don't know. But this was all before, oh boy, more of this stuff, huh? Sorry, we've been having a little bit of trouble at work with the some of the services getting behind past day or two. Anyways, that totally entered, because I was not done with my thought and I completely forgot what I was even talking about now. Yeah, I need empirical evidence. I need empirical evidence. But it's funny, to be honest, how retail traders think they are making money only based on candles and technical analysis. It's a joke. Well, it is. I mean, it's funny, but it's also sad, right? But I also think it's very easy to explain. Humans are social learners. The way that our brains are wired to work is watch what somebody else is doing and then copy it. That's what people do. Watch mommy and daddy. What do they do with their day-to-day life? This is why when you have kids, you should work with them. What does dad do? How does he do it? Because at a toddler age, they think it's all just play. They don't think of it as work. That's why you take a toddler out and you're digging in the garden and they want to shovel too. Right? Find somebody successful, copy what they do. Day trading is one of those few areas where that sort of a thing won't work. Anything competitive, if you're just copying other people's strategies, then that just means that other people are going to know exactly what you're going to do, right? Like if it's a sport, if it's physical, then there's a lot to, your mastery over your body and how strong and athletic you are. And, so there might be certain strategies that everybody is aware of, like a pick and roll in basketball and so forth. But because you're able to execute it so well, it's an effective strategy, right? But in day trading, it's purely an intellectual game. It's 100% you collecting information and then going and executing based off of that information. So if you're just following what other people are doing, it just makes you an easy target. It makes it easy to compete against you because you're just doing what they want. People want to get the easy way. If I had a son, I will teach him how to be a Spartan knight from 7 years old. Yeah. And that's why everybody's always looking for a guru. Right? And I'm trying to be the anti-guru, sort of, right? Because I'm saying I don't want you to follow me because I'm this guru that's had so much success and I'm a template that you can use to have success yourself. That's not what I'm saying at all. I'm saying, look, use empirical evidence instead and find your own edges. Right? And all I'm doing is just guiding you through the existing research to help you get started. And I don't want you to follow me. I want you to follow the empirical evidence. I don't want to gain any authority by virtue of being me and or my past performance or success. I want the authority to be the empirical evidence, which is not how people work, but that's how we got to work in trading, right? That's why I always come back to this thing that's like, well, we wanted the YouTube channel to be a lot more successful. We could do X, Y, and Z thing, but it wouldn't actually help you because it would just be entrapping people into that same trap, right? Of trying to follow the guru instead of doing your own research. Well, there is a thing to those who can do and those who can't teach, but, I don't really think that that's too useful to you here in this space. Because, the thing is if you can do, just because you did it one year doesn't mean that you can do it this year, right? Market changes. So, past performance is not indicative of future results. That goes for past negative performance too. Somebody that did absolutely terrible next year might just absolutely smack it out of the park next year. So I don't care, how have you been performing? What I care about is what is your strategy? What do you have backing up what empirical evidence do you have backing up your strategy? Right? Do I have information that suggests that maybe that strategy will be effective in the future? Did they make a new high there? No, they did not. But they sure did come back up to the highs awfully quickly. Basically, they went back across that whole range within one bar. You're amazed at how many I experienced. Well, it shouldn't be. What time does the action stop on a Friday usually? Well, that's a good question. Because one of the other things that happens on Friday is the traders finish early. But that might not apply in this situation. I mean, there's clearly somebody going long the 30-year here, man. So come back and look at the chart. Do you see the 30-year there on the bottom left? Sorry, I don't have my pen turned on. I need to go and turn it on. Do you see the cumulative delta? On the 10-year, it's up, but it's kind of a little bit okay. But in the 30-year, Like, they're buying that like crazy. They're buying that like crazy. And we're getting a flattener. They're buying it like crazy, and it's flattening. It's flattening. So for some reason, we've got a large meta order going on a Friday, which is a little unusual. That makes me hesitant to say that like it's just gonna stop, right? I'm gonna bet that there's a third leg though. I think it's a little bit risky. I don't know if the risk reward on this one would make sense. Also, I don't like that spoof at 07. I'm gonna keep an eye on that one. So when I see a big order, if we're like moving up, this is one of the ones that I just absolutely hate. We're on an uptrend, and then all of a sudden you get this huge bid just below it. Why would you put that there? Because a lot of the time what happens is they're pressing it to push it even further up so that they can get their fills and get out. That happens a lot. So whenever I see a big stack at the end of a trend like that, I'm really suspicious of it. But it's been a strong trend. And the other thing here is that we did have the pullback, and instead of it resting for a while, it came up again. Zelensky is speaking at the moment. Or was Sept speaking? Let's see here. Nick Timmeros, 26 minutes ago. Fed research shows how the recent surge in inflation has been characterized by a large increase in the frequency of price increases. But in recent months, the frequency of price changes has stepped down noticeably. It leads U.S. stocks higher. I don't have anything to explain why this long here. The other thing is, okay, so like we had a wave, I should see a liquidity hole, it should pull back. We did see that, but then they ramped right back up to the highs again. So that's either they're playing games with us, or the market is starting to move into the unhinged mode where they're just buying it and buying it. But like, what could possibly be happening right now that would be leading to that kind of a market? So if you go, Commando, if you go to my video about trading the news, I have some links in the video description to lists of people I follow on Twitter. And then you have an update the people that, you know, when I add new people and so on and so forth. To this comment that like they're all in sync, I mean, I would say that they're about as in sync as they usually are, but there's a really strong flattener going on here. The ZB bought a lot more strongly than the others did. By the way, this move higher. Oh, this is interesting. I'm just noticing this. Okay. So here's the first move. Here's this, well, the first move, second move, and then let's call this one the third move, although I wouldn't call it a third leg. I would call it just like another slip higher, okay? But look at the Japanese yen. The Japanese yen did the pullback and did not come all the way back down here. So the Japanese yen is not making another leg. But if I come back over here and now look at the dollar did, and the euro did. So this looks like this is still a currency-driven move, but it is not a currency-driven move being driven by the Japanese yen. What about the British pound? British pound doesn't seem to be doing anything interesting. Swissy doesn't seem to be doing anything interesting. So it is from the euro. Ukraine's foreign ministry opposes any sanctions relief on Russia in exchange for reviving the grain deal, says a spokesperson. So, are they really moving off of, like, Ukraine headlines? Could be. So another question, if I come to my chart, we look at how much we've flattened. Okay, so yesterday we steepened back out a little bit. Curious. Could it be profit taking off of this? Like somebody closing out a spread trade? Well, I tell you what, they're not stopping. Not stopping at all. In fact, there's a reload at 08.5. So one of my favorite trades is we're in a strong trend and you see a big iceberg just below the high. They're trying to squeeze them out here. I only take that when I believe that we're in a really strong trend day, and I don't believe that that's the situation, but What's a spread indicator? Yeah, so basically this indicator down at the bottom here is ZB minus CN. So this is charting what the knob spread is. I should change that over to candles, but I have it using just the line. So I have a pretty fancy indicator that you can get for NinjaTrader in my paid indicator package at speculatorseth.com. That's what it is, right? It tells me as we've been moving up, spread has gone down, which means flattening. Down is flattening, up is steepening. Okay. So I've explained this in some videos, but I'll try and explain it to you guys here. Okay, the way that it works is it's back month minus front month or whatever. So if we're flattening, that means I'm gonna sell the front month and buy the back month. Okay, and vice versa if we're steepening. Okay, so what I will see on my DOM is this, right? I've reset them recently so you can see they're all the same. But if I hadn't have reset them, then what you would see is the ZB is at the high, and ZN is down, and ZF is down even more. That's what you would see if I hadn't reset things, right? Flattening, right? So I can draw the line, it goes down. When I look at my chart, I look at my line, it goes down, right? So I don't have to do any kind of weird translation in my head or anything like that. It's just instinctual. Steepening or flattening? Which one is it doing at the moment? We're flattening right now. Quite I would say it's pretty hard too. Like it's a very strong flow, very strong flattening flow, very strong buying in the 30-year compared to the 5-year. Oh, username, why did the markets open like this today? I don't know. I really don't know. I wish I did. Gold like just shot out here too. So somebody's executing for some reason, but I don't have any information to suggest why. For all we know, they're just closing out positions for the week. I mean, that's entirely possible. It's really quite unusual to see a strong flow this strong on a no news Friday. It's really quite unusual. Maybe we'll get some data coming here, but for now, there is U.S. wholesale inventories, but Fed quarterly financials much later today. It does look to me though like that something's going on with the euro. So there could be some headline going on over Europe and we're just not catching it. I don't know. It's like it's buy the euro and sell the spread. As usual, the knob spread moved more than the 2 and 10-year spread did. So that's another thing to note, is that it's very much on the long end of the curve, which I would say is in line with a higher for longer kind of interest rate environment. So it could just be a hedge fund putting a trade on that. Wow, Donald Trump hosted a $100,000 a plate fundraiser for Rudy Giuliani at his New Jersey golf club. Golf club. Wow. $100,000 a plate. Okay, what is a sweep? So a sweep is not a term that is like strictly defined among traders or anything. But when a trader talks about a sweep, probably what they're talking about is when one big market order comes through and pushes through multiple prices all at the same time. So if I were to come in and say market buy 5,000 contracts, then that would buy everything at 09.5 and at 10. And probably even a few orders would go off at 10.5, right? And so I'm just sweeping, catching everything in the market there. It's very, very, very rare in the treasuries, but you'll see it all the time in ES where they're just sweep through a bunch of prices all at once. You know, market order will just come through and buy all of those, and that's a sweep. So I would read it as a bullish indicator, but can create a liquidity hole, so you kind of got to be careful about those ones. So sometimes they'll sweep through it and then it kind of falls back into that hole, right? And that's probably what they mean by a sweep. By the way, where was that big order that we were tracking? Because it looks like it moved. Now there's a big order at 08.5. I'll come over here on Zero Hedge real quick and just refresh, see if they've got any new news stories. Hurricane Lee strengthens to a Category 5 storm. Let's take a look at that. Wouldn't necessarily expect interest rates to rise. I mean, the thing is that everything is buying here. Like, the dollar is just tanking and everything else is buying. Lee was only a Category 1 storm Thursday morning. In the last 24 hours, the hurricane traversing the warm Atlantic Ocean waters has doubled in wind speeds and is now a dangerous Category 5. This is the first Category 5 storm of the Atlantic hurricane season. Lee is expected to remain a major hurricane through early next week. It strengthened Friday and reached maximum sustained winds by the evening. This would be the strongest system in the Atlantic since Dorian in 2019. Computer models show... Oh boy. Computer models show Lee is expected to turn north early next week, but when exactly that happens is unknown. And they've got a bunch of models that almost completely miss the US. Okay. So I don't know if Hurricane Lee is actually a super big concern. Oh, 08.5 was there was a big order there, and they traded back down through it. In fact, well, I wish I was watching, but 202 contracts last time it traded. You ever play Minecraft? Those stupid villagers are like judging everything that you do. Like, at what point are they going to decide that they just don't like you and do something about it? And there's another downtick. That's an extra What advice would you give to yourself if you went back? Buy NVIDIA Leaps. That's the only thing. If I go back, maybe buy NVIDIA Leaps. Otherwise, I wouldn't want to change anything. I would be too scared of changing the future. Like, the thing you gotta realize is that I did not come to this knowledge because I am some sort of prodigy. Okay, the only thing special about me is that I am unusually obsessed with the market. That's it. I latched on to the thing. I was like, this is what I'm going to make my life about. And I did it. Okay? That's the only thing special about me. So when I came in, and, well, I guess the other thing that's special about me is that I got a few hints at the beginning from some guys at a bank. One of the big banks, they kind of gave me some advice that helped point me in the right direction and helped me find the empirical evidence eventually. Right? It made me not as interested in the technical analysis sort of things. Okay? But ultimately, you know, if I had come in and just started having amazing success right at the very beginning, and had become, you know, a millionaire from my trading in the first year or something like that, then I wouldn't have learned any of this stuff, right? It was only through the constant failure that forces you to go back to the drawing board and learn more, and constantly going back and learning until you get to the habit of just that constant research and improvement, you know? And so if I gave myself advice early on, I might not have made it this far. What? Oh, I don't know. I only track it like on a year-to-year basis. Last year, was it last year? Last year overall, I made money. This year overall, I believe I've lost a little bit, but it's only like $100. So I guess you could consider that of the capital that I'm trading here, which isn't all the capital I have that I could potentially trade, but that I have in the account, I guess it's down 10%. But you know, year's not over yet. So what's your margin? Oh, I don't know. Like, I don't even trade anywhere even close to the margin requirements, man. You know, I'm trading like a $1,500, $1,000 account, and the margin per contract for like day trading margin is like $50, right? Like, I could probably trade 20 contracts before it would stop me. But I usually try and hold it to at least like what the maintenance overnight margin is. So I would maybe put 4 contracts on. If something happened and I really knew that I had the advantage and I was going to make a ton, and it was like a surefire, maybe I'd put 4 contracts on. Would Ninja be enough to start with 5K if I wanted to earn? Well, so I probably wouldn't start that way. So the first thing is 10 ticks on what? On ZN? 10 ticks on ZN is stretching it a bit. On ZN, you're more likely to get 4 to 6. Although volatility has been high lately. But the second thing is, you know, if you come in and you want to make $500, let's say, so you trade like 4 contracts or whatever, right? Well, if you're regularly making $500, you're likely to also regularly lose $500, right? And how many days in a row can you lose $500 until it's a problem? Well, I guess if you have a 5K portfolio, that means that you can do that 10 times in a row before you'd bust the account, right? So it's probably okay. But I wouldn't approach it that way. I would put the money that you have into a trading account and then just trade 1 contract until you're confident that you've kind of worked your edge out, and then slowly add contracts. But kind of the approach like, I want to make a living from this. This is how much I need to make, and this is how much I need to put in, and how many contracts I need, and all that sort of stuff is not really. Because unless it's like, I'm going to make 1%. I'm going to make like the risk-free rate per year, and that's going to pay for everything. Unless your goal is that, you're setting really aggressive goals that are likely to cause you to blow out. Is the truth. I guess I need to make a video about how much money do you need to actually trade. I'm kind of looking at this. It does appear to me that the meta order is done. It's been more. It's about 15 minutes. But larger picture, you have 5K, that's a great start, yeah. Because most people start with 1,000. Okay. But I would just start as small as possible first. In fact, if you've never traded before, I would just trade sim for a while. Because you almost always start out losing. like really, we've been doing this now, like how many years? 8 years now? Okay, like I've been doing it a long time to get to where I'm at. And it's still tough for me, right? So don't expect to go in your first year and start having money. Like, don't quit your day job, okay? Did you consider trade? So when I started, I did prop firms like Apex Funding and so forth. But after the after the micro ES futures came out, and then definitely when the micro treasury yield futures came out, I really do not see a point behind the funded trader programs. If you are good enough to get funded by one of those programs, why wouldn't you just trade your own account? Well, because you don't have enough money. Well, there's micro futures. So that doesn't make sense anymore. So the only thing that I think that the funded trader programs really make sense for is like YOLO strategies. Something that you know has a lot of risk, but that you have a reason to believe that it could be successful for the near future. I mean, if I want to make some money to invest it. If your primary goal is capital appreciation, you should just put the money in an S&P 500 index fund. Honestly, like you can understand, almost everybody, and I mean like 99% of traders that try futures will blow their first account. Just straight up, they'll blow it. Almost everybody. So I say, okay, you have 5K. That's good. You don't even have to put all of it in. You could just put 400 of it in to start a NinjaTrader account and trade sim for a year. And then put the rest in the market or something like that. And then when you feel comfortable, you can take it out and then you could start trading it, right? That would be like the prudent thing to do. I know, of course, what people want me to say is, yeah, like this, I've got this strategy for you. You just follow what I do, you're going to become a millionaire. So yeah, just put as much money into it as you possibly can. Such as, right? That's what people would like to hear, isn't it? But no, the reality is you almost always blow the first account. So, you know, maybe trade sim for a little while first. Yep. And then when you do start a live account, start as small as possible. Only trade one contract for a bit. Or if your strategy really heavily relies on taking multiple contracts with sequential profits, then, you know, take the number of contracts that's necessary for you to do that. Let's see here, what time is it? 8:17? Yes, this does look to me like it's probably done. I think this trend is probably done. Very curious to me that like third leg came in the way that it did so quickly. But hey, maybe we can just chalk it up to it's Friday. Something definitely happened in the euro, though, man. It does kind of make me wonder if it has anything to do with Ukraine. How important is analyzing context before even looking at order flow for the day? I'm not sure I 100% understand your question, but I'm going to know what I think the flows are before I even come and look at the charts. Most of those things that I'm looking at, so like when I wake up in the morning, first thing I do is I pee, like everybody else. And while I am peeing, I read the news. I go to News Squawk, and I read their overnight news synopsis and read what happened overnight. Okay, so I know what was happening overnight. I know generally what the sentiment is feeling like that day. And then there's all of the other things that I know possibly based on like the time of the week and all these sorts of things. I know all of those things before I even come and sit down. So usually before I sit down, I have some idea what the flows are going to be. Then I come in and I look at the charts, and at that point then I explicitly decide in my mind what the direction of the flows are going to be, right? If I think that there's a trade, right? And then, I'll be looking at the flow. So I don't know if it's necessarily important, but like the thing is let's say that there was an iceberg, that 5,000 contracts traded at 08 half. Okay. Well, it could be that somebody needs to sell. Like there's a really big meta order that's like 100,000 contracts out there. But I don't know which way it's going to go, and I just saw an iceberg. Well, which side of that iceberg is that huge meta order that I'm anticipating? Could be either side, right? Could be that he's passively selling it and he's the iceberg, or it could be that he's buying it with market orders and he found that other guy with an iceberg and he's buying through it, right? No way for me to know. Right. But if I know that they're going to be buying, if I know not only is there going to be a meta order, but that meta order is going to be buying, then it puts it in a different context, right? Probably is the guy that's hitting with the market orders so quickly. So you see how, like, when you're looking at order flow, because there's two sides to every trade, you can kind of, when you're making a scenario up in your mind about what may be going on, you'll be able to make a determination both ways usually, right? And so being able to know what the flows are going to be ahead of time and analyze the flow within the context of that is going to make your read a lot more accurate. My understanding of all the fancy order flow indicators and charts aren't really useful without understanding context first. Not sure if you feel it. Yeah, I do feel the same way. Because like when I started, I was told, okay, you wait for this particular setup to see that you'll see on the DOM, and then you trade it, right? And I would try that, and like it did work for a while, but then it stopped working, right? And so then I would be like, okay, I think this X is going on, or I think Y is going on, but I would always be like, well, but how can I prove that? How can I prove that that's actually what's going on? And the reality was I couldn't. And so that was kind of around the time that I kind of, learned a couple of significant things, right? The first one was everything that we know about, you're trying to predict the large meta orders, et cetera, et cetera, et cetera. And they're kind of sneaky about it. So you need to know what the flows are going to be ahead of time. And then you'll see the support for it. You'll say, how would I be executing that in this situation? And then you see the flow matching the way that you would be executing it. You take it, right? The other thing, though, is to generally approach it as that the end balance is in favor of the market orders. That by and large, the people that are market makers only use limit orders, whereas the people that are speculating and or trying to fill large meta orders are going to use half limit orders and half market orders. And so when I see an imbalance in favor of market buys or market sells, then I'm generally reading that as a meta order. And that helps my interpretation of things a lot as well. otherwise, there's no way to tell what's really actually going on, is there? Would you believe me if I told you Forex is based on mathematical equations, since Gov are the ones in control of it and every movement is... No, I wouldn't believe you. You have any empirical evidence to backing that theory up? So Forex is a really interesting one because there is, you know, government insiders that know stuff that's going to move things, right? So it's possible to be the informed trader in that situation and make a ton of money. It's just that you or I are unlikely to be that person that's the informed trader, right? So yeah, especially on the bank desks, like my understanding is that the Forex traders, it's some of the most stressful because they don't have a lot to go off of. And that's why Forex very much turned into trying to use the technical analysis and so on and so forth, because that's basically like, that's literally all they have to go on. You know? But, nah, I'd be very skeptical that there's some sort of mathematical equation that I can use that will predict it. But if there was, it should be really easy to prove, right? And it says still have no IR positions on. That's interesting. I definitely should have taken the long before the open here, you know, like if it wasn't a Friday, I might have tried going along with it. But this is a pretty good trend. This is a pretty good trend today. Does look like the dollar has stopped its decline. I have a hard time understanding, like, if you watch ZF at 160, 2280, oh, okay, 2280 at the top, 272 market sold. Could you see those buys? Were sellers shorting or question mark? Okay, so first thing is, like, how much was on offer at that time, right? So there's nothing on this DOM that's anywhere close to 2280. I mean 1700, but that's like at the height of the day. Most of these prices, there's only 1,000, and if we're on the inside, it's only like 200, 800, right? So first thing is, there was an iceberg at 16. Okay. Also, 16 is a round number. It's half of a handle. So there was an iceberg at 16. Okay. They punched through the iceberg at 16. 272 contracts bid, and they probably almost immediately sold into it. And so no orders went off at 16 quarter. Now, it looks like from the chart that we were actually up there at 16 for a little while. But it looks like that there was just some liquidity there at 16, and the buying subsided before they were able to push through that liquidity. So that's how I would read that. My evidence is that that's not evidence. Empirical evidence is like, I can go and I can verify it myself. That's what makes it empirical. For first and only person. Oh, thank you so much, Mando. It sounds like that explanation made sense to you, Wealth Talk. I'm not quite sure I understand the... It's the second time you've asked me about stuff at the high as well. Because I'm concerned that maybe you're thinking of it like, okay, what do I need to see there that will tell me that that's the high and it's going to reverse now, right? But that's what's so funny about these things is that, again, the market orders are dominant. So, you know, it just happened in that. You might know, there's, 1692 there at the high. And maybe there's an iceberg. And sometimes you can even kind of guess how big the iceberg is going to be, actually. Yeah. Sometimes you can even guess how big the iceberg is going to be. But the thing that's hard to guess is how many market orders are there out there? Okay. Because on a normal day, like a 5 to 10,000 contract change in ZN in cumulative delta is a reasonably decent trend, okay? But I've seen days where we move 200,000 contracts net over the day in cumulative delta, right? So it's always going to surprise you. You think you've seen a lot of orders come through buying, and they're not even close to done, right? There's just no way to look at the past, say this is how much volume it tends to be based on the past, etc., 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 and accurately guess how many contracts it's going to be that time, unless you know why it's happening. If you know that it's the Bank of Japan that's buying them, like it's a sovereign wealth fund, which sometimes we do. We have had some situations where we knew that, right? Then you know, oh, that's going to be a trend that it's just going to be like insane the amount of orders that are going to come through long here. If you know that. If you don't know that, it could be any amount, right? So it's kind of dangerous to say, okay, like there's an iceberg, that means this can stop. Well, in that time it did stop because the meta order was over. Meta order was over. They were just kind of trading around random, and there wasn't enough market buys to get through that. But how would I know that there wasn't enough market buys to get through that ahead of time? In that situation, I think it's almost impossible. So there's no way for me to have predicted that it would turn at 16. So I just kind of have to chalk that one up to, oh yeah, okay, that was interesting that it turned there. Right. I only care about the flows that I can predict, essentially. And typically the sort of trade that I'd be looking for where I feel like I can predict the orders is like, it's not really doing anything, and it's at the beginning of the session and it's quiet. I can take a position before the guy starts executing his large order, right? And then a trend starts after I get in. That's what I'm looking for. Where's the DOM for the ES? Is it top left? Yes, it is. The top left DOM is the S&P 500. It's kind of hard to see because the text is gray, but there are labels at the top of every window showing you what instrument it is. And if you change the quality of the stream to the full 1080p quality and make it big, you'd be able to read them. So it's curious, we have come back a little bit. It does look like things are dying down. There appears to be another kind of liquidity hole of sorts at 07.5, but there's been a pretty healthy amount of trade there. So the treasury is still pretty active for Friday. That could be because the market makers and the speculators and so forth are still kind of rattled by that huge order, by that huge trend that came through, and are still trying to, rebalance things. Can you explain why it is called ES? ES. So the The contract is the E-mini S&P 500. So it used to be that it was the electronic S&P 500 futures, right? And then those were too big, so they made the E-mini. I don't think they even have the full E anymore. I think they got rid of it because everybody was just trading ES. Now they have MES, micro ES. So it's E for E-mini S&P 500. I think that's why they call it that. Some of the symbols that they've picked for things just kind of, because you got to create a unique symbol for each one. On the CME, they tend to be only 2 letters. There's only so many combinations of that, Yeah, Khalud is confirming to me that the original SP 500 futures were indeed discontinued. Because I think it happened since we've been trading. Now, I don't know. So the thing is that if people that are trading futures, they're going to call it ES, right? Or SPOOs. They might call it SPOOs. Oh, did it happen this year? Oh, no, you're right. You're right. I do remember that now. And we read it on Twitter and I was like, oh, I didn't know that was still around. Did you look up to as a hero? Oh, I don't know. I mean, I can tell you the people that I watched when I started trading were John Grady from No BS Day Trading was where it really started. And I watched a lot of Futures Trader 71 stuff. And I read a lot of Gary Norton's content, like his book and stuff. I'm not the kind of person that tends to idolize people or say that they're my hero per se. Especially not during my development. I don't know. I just don't think of it like that. I feel like that anytime you idolize people, that they disappoint you in some way. Okay. But if there's somebody right now that, they're posting, they if they had a new book out, I would be pre-ordering the book and everything, is Jean-Philippe Bouchot. He's the guy that wrote or one of the writers of the Trades, Quotes, and Prices, and one of the best market microstructure researchers out there. And he is on LinkedIn, and he posts great stuff on LinkedIn all the time. And I just absolutely love the guy. And he has probably learned more from him than from any other source, because it was really all of these things that I thought I knew and everything. Now I really understand why. Now I know why the market is the way that it is. Why it's so hard. Why it seems like that there's patterns, but then when you trade the patterns, they're not there, or you think there's a pattern, but then when you trade the pattern, it doesn't make you money. Well, it's because there are patterns, but those patterns don't necessarily make you money. It's just the whole thing. It's almost like once I understood those things, especially, moving from the order flow scale to the meso scale, and learning about how that results in orders having strong impact and being able to arbitrage away statistical inefficiencies out of the market very, very quickly, but also not leave price anywhere even close to where fundamental value would be, right? When you understand that, to me, it was you can see the matrix. Now, all of a sudden, these numbers that you're seeing all the time, and you're well, does it mean this or does it mean that? Now it makes sense to me. And it's not just oh, okay, I think this is going on. Maybe it happened that way. Maybe it didn't happen the way that I wanted. No, now it's I know. And you'll see these behaviors every time. And if you're not seeing them, then I don't necessarily know what's going on, you know? It's just kind of like, okay. You could see here today, for instance, that, you know, I said, hey, if it wasn't a Friday, I think I probably would be going long here, right? Well, it was a good place to go long because that was like an 04.5, right? No, it was 04. It was a way more of a trend than I ever thought it was going to be. But it's just because these aren't things that are like, you know, you win 52% of the time, but that 2% over enough trades really, you know, no, it's not like that at all. These are things that are like consistent. And if you're using them for your read of what's going on, you know, they should be reliable every day. Some of the names that are the old names got stuck, like they're still calling the pound cable because the first underwater cable was built to have better speed on that instrument between the UK and the USA. Yeah, they still call it cable on Financial Juice, but I don't call it cable. Gotta go now. Thanks for stopping by. See you next week. Still got 20 minutes here though. Treasury's given up on those gains quite a bit though. In fact, I'm seeing pretty strong evidence for a meta order selling the other direction. And there's still been some pretty decently sized icebergs in here throughout this too. So I guess we have two-way trade, but I just have no clue why they're trading it today. Was not expecting this at all. You know, I said it at the very beginning. Today might be a really boring trading day. It was not. But I didn't take any trades. Some of my biggest losses have been on Friday, so I'm always always a little hesitant to trade on a Friday. What about the S&P 500 here? How? Well, it's above yesterday's highs. Don't know. Jimmy Oreo talking about UBI. I don't know, maybe I should try to be more like Jim Oreo, because he posts a lot of political stuff even though he's primarily about trading, right? And he's talking about UBI. I despise the whole idea of UBI because it's like, okay, we need a UBI because in the future a lot of people will be put out of work from robots and things like that. And I'm like, okay, so like instead of creating a world and an economy where everybody can contribute positively to society in a way that creates a living for them, you're just going to say, oh, we give up and we're going to just give them money. Like, it's such a depressing take on the future. That it's just so disturbing that people want to make that future happen. But I guess most people just don't appreciate work anymore. So it's all these kids. You've seen these kids on TikTok that are like, you know, I started a corporate job this year and like, I'm supposed to do this for the rest of my life? Yeah. What do you think adults did? You work. And whatever it is that you've decided to do, you learn to enjoy it. That's part of being an adult, kids. Is learning to enjoy those mundane, or hard things. And finding the beauty and the joy in doing those things. This whole like, oh, we just, you know, a bunch of you won't work and we'll just pay for it. It just sounds so awful. Like that you're, how are anybody can be able to find meaning in life in that situation? Like, you think you're depressed working a corporate job? Yeah, let's see how depressed you are when you're basically living on welfare, okay? Old farts look at 9-to-5 jobs and are like, yep, this is the best we can do as a society. Well, it's not the best that we can do as a society, but like learning to enjoy work is an important part of being an adult and being a person. Okay. Like this fantasy world. Okay. Let me put it this way. There's work in heaven. Okay. It's the way I mean, your conception of heaven might not be the same as my conception of heaven, being Mormon and everything like that, but there's work in heaven, okay? The thing that sucks in today's economy is that not very many people are able to reap the rewards of their labor and turn it into long-term investment, right? You're spending so much time building somebody else's empire that you're never able to build any of your stuff. Because over time, you should be able to increase your assets, and because of those things, increase your efficiency and be able to invest in other things and just become more and more wealthy over time, right? We want to get as many people as possible into that. And so that's part of why we have things like 401ks and so forth, like really strong incentives for people to be able to save so that they'll have money for retirement and so forth, right? But most millennials are not saving. Most millennials don't feel like they're building up capital to be able to do those things. That needs to change. But it's not going to change from like, you know, don't work, we're just going to give you the money. If capitalism is broken, the answer is not. You just shouldn't have to work. Or, you know, like, because to me, that's like, then you never grow up. You basically, if we had universal basic income, okay, and a large portion of the population was just only living on, you know, like the average person who would live and have and support a family on universal basic income and not have any kind of job, any kind of work at all, and just play video games all day, okay, then you're creating a class of people that never get to grow up, basically. No, because it's about like that would be a whole system that is just contrary to human nature itself, right? You ever heard that thing about like the rat utopia, where they created this little rat society and they gave the rats enough food and water and everything that they were all satisfied, and what would happen is like the young youth rats would like band together and start causing chaos and like murdering other rats and all sorts of crazy stuff, and like the rat utopia within a month just like decayed into chaos and anarchy. That's what would happen. Okay, like the human mind is optimized. Everything about our brain, when you look at it from an evolutionary perspective, has evolved to live in a tribe. Okay, part of the way that one of those adaptations that makes us very effective is that we as humans feel like we need meaning in our life. the reason why you feel like you need meaning is because you need to feel like you're contributing to the tribe. So if you create a class of people that have no way to contribute to the tribe as a whole, you're just going to destroy them. You're not helping those people by doing that. Yeah, they might have more money they might eat better, but mentally you're destroying them. And you're denying them the opportunity to find self-fulfillment. And by creating a perverse incentive like that, you're basically creating a force that will hold people, because of course anybody could still go out and try and make a living and get a job and everything, but you're creating this thing that would hold people back from wanting to do that or trying to do that, because they would all just think it's pointless. It'd be a very bad thing for people psychologically. How can we see the stock market in the Matrix way you said? Where can we learn these things? Are these the main things you focus on? Well, they're definitely the main things that I focus on, and they are pertinent things in the stock market, and in many respects more pertinent in the stock market than in the futures market, because the futures markets are all thick-ticked instruments, and some of these behaviors are even more pronounced in a thin-tick instrument where there's a spread and so forth. So you definitely will see these behaviors in stocks. It's harder to get the order flow in stocks, but it does exist, and I made a video about that through DX where you can do it. You can't submit orders through that data feed, but you can at least see it, and then you could submit your orders on Fidelity or whatever platform you're using. Okay. It's old school thinking. I don't think it is. I think it's pretty well, okay. Whether or not it's old school thinking is probably irrelevant. How do you know that it's not true? Because I'd say that it is absolutely true. People need to feel like that they need to feel purpose. They need to feel purpose. Basic universal income basically destroys all purpose from people's lives. So it's also why you got lots of really depressed young people, because they never got married and have families. So if you're not working to support your family, then why are you working? So that you can come home, go to sleep, and go and do it again? There's no point. Well, yeah, if all you're doing is just for the money so that you can keep living, then there isn't really a point, right? Because you're not there's no purpose to what you're doing other than to keep yourself alive. But people need more purpose than that. We evolved that because we're tribal animals, because that drive, that instinct was useful to the tribe and is what caused people to contribute to the tribe more. Nah, I don't think that paid leave and parental leave would be the same thing at all. So the United States should probably create paid parental leave, because the amount of time that most companies give a mother is insane. It's like they want you to be back working like a month after you had the baby. As just what? So crazy. So crazy. And it's very, very harmful to women's careers. And if the structure was set up more so that they had paid maternity leave and, everything was good for them when they came back a year later, which is hard, but then the pay gap between men and women would probably decrease. And I think that we have a pretty good amount of statistics. Of course, this is not something that you can really empirically test, can you? But I think that we have a lot of solid, numbers and so forth that suggests that maternity leave would be net beneficial to the economy and more beneficial to women. And it would, because I think that there's a problem. Like, if you tell women your only purpose in society is to breed and clean the house, like, society just doesn't value that, to be frank. I'm not saying it's right, but the society doesn't really value that. And I think that a person needs to feel like that their life that there's more than just, keeping this toddler from killing themselves, right? So, a women, eventually they're going to want to, and then the really big problem is like, okay, and then the kids are gone, and then what's your life about? Right? So women need more than just that, right? And providing a structure where they can work and still raise kids and not have to put them in daycare all the time. The more that you can do that, the more beneficial it would be for people overall. Okay, so many people are living paycheck to paycheck. In my opinion, if you are not living paycheck to paycheck, you're doing something wrong. Okay, if you are keeping like $10,000 in your okay, you have like a safety account, like a rainy day fund, right? Okay, but if you're accumulating $1,000 in your bank account every month and you never do anything with it, there's something wrong. There's something wrong, right? You're probably not contributing enough to your 401k. Okay, like for you to be getting to the end of the month and done everything that you should be doing that would be prudent to do financially. Okay, so like you should contribute. So let's just start from the beginning. First, you should max out your employer's 401k contribution. Then after you're doing that, you should max out your yearly contribution to your IRA, and then you can max out your 401k. Okay, so in order to make enough that you would be doing those things in today's economy, you've got to be making like $260,000 a year. Okay, like hardly anybody gets to that point. Okay, then it would make sense that you would have extra money sitting in your bank account, and then at that point you should be putting that money into the market. Okay, so the reality is everybody should be living paycheck to paycheck. Okay, now it's different if you are not investing any money at all and you're just barely paying for your expenses. And that is what is really truly meant by that you're living paycheck to paycheck. You're like living in the cheapest place that you can. Everything is the cheapest that you can. You're not investing any money, and you're still using all of the money that you make a month. Then there's a problem, okay? But that's not most people in this economy. Most people just feel like that they'll say that they're living paycheck to paycheck, but they're not thinking about, how much money am I saving every month in my 401k, etc. What are some things that I'm paying for that they're not the absolute minimum, So that statistic about how many people feel like they're living paycheck to paycheck doesn't actually, it tells you something about the psyche of people, but I don't have any money, but I'm going to be okay. The larger goal here, what's Seth's purpose in life? To create as many billionaires as possible. Not millionaire. If you're a millionaire, that's great, but that I don't get to put that on no, you have to become a billionaire. Okay, so when you become a billionaire, make sure you come back and tell me, hey, Seth, I just reached $1 billion in net assets, so that I can, put a check in my book. Mostly, though, I'm assuming that it will be like my great grandchildren that will become billionaires, right? Of my children, including the stepchildren, how many of their children's becomes billionaires? That's how we judge the effectiveness of what I'm trying to do here. Promise still. Okay, cool. I don't know. Like the thing is, there's a lot of problems in today's economy. Okay, It's a real problem that most people, okay, like look, I'm a software engineer, so software engineers are making more money than most people in this economy, and I'm a site reliability engineer, and I don't say that to like toot my own horn or anything. It's just that's what it is. That's the higher end of the pay scale. Like that's the most you're going to make unless you're in management, okay? And I could buy a brand new house today. Like I could buy this house today, but it would be incredibly tight. And I'd be very nervous, and I would be not as confident about the ability to, continue to grow the earnings enough to make it come down in the future and things like that. Okay. So if only the very top earners are able to afford housing, that's a real problem. Okay. And yes, a lot of it is because of interest rates, and supposedly interest rates should come down in a year or two. But even after that, it's still going to be tough, because then once people can afford things from the interest rates, they're just going to flood in and buy the houses again. And the real problem here is that we have been underbuilding houses for 15 years. This is a problem 15 years in the making. Isn't it so crazy? Like, okay, in Canada right now, the Liberal Party is just getting slaughtered. And why is that? Well, because they're having an even crazier housing crisis in Canada than we are here in the United States, especially in Toronto. It's like nutso over there in Toronto. And the left has been in charge there the whole time. So what excuses do you put up? You can't blame it on Donald Trump. So people in Canada are kind of pinning the whole housing crisis thing on the left, because they'll just say, oh, well, we need to create these rules that prevent them from raising rent and all of these sorts of things. But guess what? It doesn't cause them to build more houses. It doesn't solve the supply problem. And ultimately, it's a supply problem. You can't underbuild houses for 15 years. And the big problem here is that you can't solve a problem that's 15 years in the making overnight. Maybe we can solve it, but it's going to be tough, and it might take another 15 years to fix. It may be, well, the case that a lot of millennials will just never own a home because they'll never be able to afford that. And that's because of decisions that we made 15 years ago. Meanwhile, are any politicians talking about fixing it? Because the only things that I've seen are the same failed policies that we get from the left, like price controls and stuff like that, right? This is like, man, GOP, like, it would be a slam dunk if you made your primary issue the cost of housing. But they just chalk it up to interest rates. But if you came down and you said, hey, look, builders aren't building very many homes. Why is that? Well, because number one, the trades aren't very attractive. So we don't have enough people actually doing the work of like electricians and plumbers and carpenters and so on and so forth. But then there's funding problems and there's problems with like the incentives. It's just hard to be a home builder. Like, you don't make the money necessarily, especially not if you're building cheap houses. Okay, like building the lower income houses that are like what we actually need, it's not worth it to the home builders. So you don't do it because they just like, there's so much demand that they can just build the big houses and those ones will sell. So why, and you make more money on those. So why not just build those? The year 15 years in the making, politicians aren't doing anything about it. That's an example of, yeah, there's definitely problems in our world. But the problem isn't that you have to work. Okay? Any system or solution that basically turns into a large portion of the population just doesn't work is a bad system, and I'm telling you, it'll lead to bad things in the long run. Isn't buying a house in America pretty cheap? No, it is not. It's not nearly as bad as it is in Canada. And in Europe, they've kind of had these problems for a while. Okay, but you cannot afford a home on average income in the United States. Well, it's the land categories that prevent that. That's part of it, I think. So, especially in areas like San Francisco, you're totally right. But in my area, it's the same problem. We don't have those same kinds of building codes. Not to nearly the degree. I mean, like, look, I don't see a whole lot of high density housing going up here in Utah. I don't think that people really want it though. Okay, but there's plenty of room. There's still plenty of areas that are like relatively close to city centers and where people could build out. But they're just not building out that quickly. They're just not. So that is one thing, but I think that there's probably some other things about some of the regulations and the way that monetary policy is going that is disincentivizing home builders from building low-income housing. And you could probably just create a subsidy that says that if you build a house that goes for, that a average income person can qualify for, that we give you extra money or something like that. But I think it would be better to just solve the other problems. So getting rid of zoning requirements would certainly help, but there's other stuff going on. And you're also right that boomers have a vested interest in us not solving this problem, which is probably why none of the boomer presidential candidates say anything about it. But I'm telling you, if you were a presidential candidate and you made your issue the cost of housing, it would be a slam dunk win if you were a Republican. Because if you made that big of an inroad with millennials, you would just dominate. And you just go and look at Canada. Millennials are like more likely to vote for the conservative, even though I know they're more like centrists and everything, but that's the template. That's the way, that's the winning way for Republicans if they really want to go for it. Okay, I'm over time. I better get going. I will see you guys next week. I got a lot ahead of me this weekend, I think. So, in the meantime, stay excellent.